Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So Fed is out of the way. They didn't really do much. They're going to stay accommodative. I guess it was a bit more of a positive tone, but it's out of the way. Good job, Big Ben. And now the debate goes on why the market could stay up with the GDP coming in negative. Meanwhile, maybe the market's forward-looking. Who knows what the forces are behind it? But today we finally had our first day where a little bit of a setback. A little bit of a day if you're an active trader like myself that could really maneuver quickly. A day to clean up some positions, maybe add an additional cute short on the spiders, which I did do but took some off, and just get a little bit out of the way because we've come very far very fast. I think ultimately market goes higher. Short term though, why can't we just shake the tree a little bit? So with that said, I talked this morning about two ways that I would lighten up a bit or potentially add to my hedges. One of them was if we push through the prior high, which was yesterday's high, which on the spiders was, I believe, 150.85, make a new high, come back below, and then get some downside pressure. That was one way. That's what you call an 80-20 trade, or a little bit of an outside day, or just a day that changes something. Or you start breaking the 8-day moving average. So with that said, there were some signs because we got a little bit of both. If you go to the spiders first, let's take a look at the spiders. Okay, we go right here to SPY. This is what we talked about. Listen, I know it's not blaring, and I'm trying to, I guess, look at something because everyone keeps telling me how I'm buying the top, how I'm being irresponsible, blah 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 blah. So I want to show people that we do time the market, and we're not just perma bulls. We trade both long and short. But anyway, here was your gap up to start the year. Okay, nice digestion, stair step higher, stair step higher. We broke above 1474. Then we continued to track the 8 days. So this was one of the first times, let me see if it's the first time this year, that we actually pushed through the prior high. We talked about it at the morning call, 150.85, and then they didn't really save the market. Okay, so to me, a little sign. And look at this move, okay? So I'm like dissecting this thing with a microscope, and I feel like because of my Twitter feed and everyone's so bearish and everyone's trying to call a top, every pull and everyone's getting so scared, it's gotten me a little bit unnerved. But anyway, a tiny bit of a push through failure. Here's your 8-day moving average. You want to draw your line. I would love to see some type of pullback to the 148.11 to have the 21-day moving average catch up. And that would be a good area to, I believe, either cover some of your hedges. I did cover some of my overlay, but I'm still short overnight. I think I'd rather have a down open than an up open tomorrow. And if you miss this end of the move, buy back. Okay, we hate when people chase, and if you were chasing up here into the excitement, you might have to I guess withstand a little bit of a pullback. And who knows, we might not. This 8-day might be strong. But with that said, when I like to look for clues and I like to go out into the marketplace and see what has been something that has been leading the market, think about it to yourself. What has been leading the market? Oh, not the industrials have been, but the transports also, and the Russell. So even though they're the most extended, you look at the IYT. All right, this was the descending channel that we got very excited about. I love channels. I love long consolidations, and that's exactly what took place here. Here was your breakout retest, and then from there we followed the 8-day all the way up. Look at this, guys. From December all the way to the recent peak, we have not closed on the 8-day. So what is different here today? It's like, where's Waldo, or one of those school things where it's like, what is different than the other? This is the first day that we broke an upper level, so you could have used a high level stop, or some guys got short, a cute short, and we closed on the 8-day. Did we do that here with a red bar on the lows? No. During this entire trend? No. So as a market timer, as an active trader, if that's what you are, this was a signal to get out of some. And for those of you who tactically just trade and don't hold positions, here was your first short. So now the question is, what type of retracement do we get? And here's the 21-day moving average. And I don't see why that can't happen. I think that would be very, very healthy. You go with retracement rules from this breakout right here all the way to the peak. Okay, right now the 25% retracement on this is only 101. So let it come to 101 and then see some type of reversal to maybe buy some transports if you didn't, if you missed out on this move. And then the 0.382% retracement is right here, right around 100. So I would write this down if you're a transport trader. So that is one sign that maybe the spiders could test the 8-day, which is still 40 cents lower, and maybe get to the 21, because this group, which led the market first, did. Okay, you look at the Russell. Same scenario. This group, very, very strong. Took out the September highs well before, a lot of other groups. And from there, what has it done? It's followed the 8-day moving average all the way to the highs. And then what was it allowed to do today? It was allowed for the first time to close right around it or right on it with a nice potent red bar engulfing some days. So right there, that shows you something different. If you were in tier 2, tier 3, and you want, and you're a macro investor, get back down to tier 1. Give it some time now. Here's a 21-day. Write it down. Map it out. That's where it can go. Obviously, we're going to have to know the pivot, which is 88.69. It has to get through here first. But overall, this is a small little day to take notice. Okay, and if you want to, go with your fib retracements here, a lot of people do it a lot of different ways. You could, I guess, say from this breakout all the way up, the 25% retracement of that move from the low on, I think this was the day before New Year's, this was New Year's Eve, takes you to about 88.40, which is a little bit lower. And then the 38.2% retracement happens to be around the 0.382% and the 21-day, same thing. So this 21-day looks to me like it's going to be a nice area to test things if you got out of the way on this break. And that's, again, if it gets there. You never know where they're going to go. It might go further. You don't know. All you know right now is you had your first break, and here's your pivot, and these are your fibs. Okay, let's see what the industrials did. Industrials, not so severe. Okay, it also had a really nice gap up to start the year. Here's when it started to go. And here's your 8-day moving average. What did it do? It closed on it. First engulfing day for this industrial on the 8-day. Little invitation to lighten up. If you're a macro investor and you're not going to buy it back, you sit tight. Typically you could just sit through a lot of things if you're that type of investor. Here is your 21-day moving average. If you want to do the same type of analytic to be consistent, because I like to be consistent, you go to your fib retracement from New Year's Eve all the way to the peak, which is right here. Okay, I don't know if this tail is real, so I'll put it somewhere around there. Here's your 25% retracement, comes in right around 39.78. It's allowed to retrace. That would be healthy. And then here's your 0.328. Here's your 21-day, right around 39.50-ish. So these are all levels that you should watch back and read and see what the story is. Let's check out the financials. Financials held up a little bit better. Financials, let the 8-day catch up, didn't close on the lows, still flagging, haven't been really basing since their earnings. You want to take a quick look here, to see if anything's changed. Nothing's really changed here, except for some of the banks have been mixed and not all are participating. But right now, it's still, here's your gap up, here's your 8-day moving average, here's your flag. Is it going to resolve to the upside, or is it going to break this and come into the 21-day? Okay, why not be a little bit lighter just to make sure you don't have to be in harm's way if it comes down, because you don't want to be selling here when you could be buying. So, I'm going to check the temperature of a lot of these sectors tomorrow in the morning call. As far as high beta, I'm not going to get into it. I'll get into it on the call. Actually, I'll talk about Apple. Apple, I'm not taking Apple home. I still think it acted okay. For me, it was a 3-day trade. You take a look at the chart. Here was that low. All right, you had a decent move 2 days back, and then yesterday it kind of had a little follow through, and then today, I wouldn't say anything extreme. And for Apple, this is actually pretty good that it didn't fall apart. So for me, I got out of the way. I know I said I would give it to 452, which I didn't. So I'm flattered right now. And I'll let it see if it can go sideways. If it goes sideways over here, you bet I'll be a buyer above today's high of 462.60 and then through 465 for what could be, somewhat of a gap fill. So I think the next few days will be interesting. What will be interesting is also if the market does pull in a little bit, can Apple actually show a little relative strength? Oh my goodness, that'd be something different for Apple lately. So here's that inside range, and we'll see what happens if it could hold it and go a little sideways and then continue, or if it just fails and comes back down here. All in all, Apple's had a lot of 3-day bounces that have amounted to nothing. Okay, this is when it broke, the 21-day moving average. That was at, head and shoulders top. Here's, when it just continued all the way lower, broke the 200-day, one little red dog reversal. Someone erased all my lines. Here's that downtrend that's been controlling this stock, and it still is. Also the 21-day that's been curled over. It's only been over it twice, for this one for 5 days, this for only 2 days. So, that comes in here, and it's probably slowly going to reach this area. Getting through the 8-day, I guess, will be an obstacle because it's been also like a resistance wall. Google's a little bit better, with the market the way it was, didn't have the juice to continue. I came in long, I bought a little bit as it went positive, and then once it couldn't hold above 758, I said, you know what, haven't been holding Google during the course of this move, so I get out of it and I'll see how it hangs out and see if we continue to show relative strength to get back involved. Here is your new little channel here for Google. Netflix has been still a nice two-way trade back and forth, holding higher. Nice range being developed here. Here's your upside of the range. Here's your support. Here's the middle. So we'll see what happens here. Over the next few sessions, keep actively trading around it to then get some type of resolution. Probably will be to the upside, but it might take some time to absorb this huge move. TBT, I sold a bit of it and talked about it on the virtual trade floor before the Fed, just because it was at higher highs, and you had resistance coming in right around 69. This was the last area. Got involved on this day. So, it's been a nice move. I'm still in some, 8 days down here, 21 days, so it's going to take some time to catch up, or maybe it just stays in this range. We'll see. My DBC, which is the commodity indice that people have been tracking me with, I've been long it for a week or so. I'm not exactly sure. I think right around here. It closed well, so I stayed with that. Not a good sign when this thing's moving higher and some stocks aren't. They're showing we're paying a lot of stuff, a lot more money for our goods and services. But anyway, good trade so far from here. It's been on the VTF for probably almost 2 weeks now. So with that said, it's far from game over. And for me, I do think that there is a chance that we test 1474, the prior breakout, at some point over the next 2 to 3 weeks. All right, February historically is a very, it's not a great month. I think it's one of the 3 months that historically is down, because usually Januaries are strong, but it could be 1%, 2%, who knows. So, after a historic move in January, a nice move from the summer, if we start breaking the 8-day moving average, which we've seen a little bit of that, why not take some risk off? So this way you could create alpha for your portfolio. I know me, I'm pushing my keys every day. You've been seeing anywhere from 5 positions to, I think 15 was my high. I think today I only have 7 longs, but I have a weighted short. So I'm trying to make some cute money on the short side to fund some long, so when we turn, I can get in there and get some core positions back on as some of these ranges tighten up. As of right now, I really don't have any core longs on. I actually sold some of them too early, so I'd love to see a little bit of a correction, some bit of tightening, so I can put some core longs back on versus just trailers. So we'll see how that develops. But all in all, we have some, we have the unemployment Friday is 2 days in front of us. We'll see what happens tomorrow. Lots of trades to do. Nice two-way action finally. The trees shaked a little bit, or shaking a little bit, and we'll see what that amounts to. But again, pullbacks are healthy. As long as you don't buy tops and sell the 21-day or the 50-day, you're in good shape. Hopefully you sell into extensions, you get out at a high-level stop, you hold a little bit to stay involved, and then once you see a bottom type of reversal, you get involved, and then once it breaks out and goes back in motion, then you're in a core trade. And right now, for me, I haven't seen a lot of them, work because of the way we've been extended. So we'll see how that develops. Have a great night. I'll see you in the morning. Scott Redler, T3 Live. Hasta la vista.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.